Welcome, dear traders. It's me, Kate Tichina, and you're watching a recap of the Asian session. Yesterday, Wall Street experienced a new wave of sell-offs. Australian stocks, which are sensitive to the sentiment on Wall Street, declined on a Friday morning. Japanese shares also drifted lower, especially after the release of inflation data. Renewed hopes of a Santa Claus rally subdued again following a sharp drop on Wall Street. Optimism faded after the release of a fresh U.S. macro stats. U.S. GDP for the third quarter rose by 3.2%, beating expectations for an unchanged reading of 2.9%. Initial jobless claims totaled 216,000 versus the forecast reading of 222,000. Robust economic growth and a tight labor market are not the harbingers of a recession. Besides, a recession will hardly take place in the near future, given such strong data. For the Fed, this is a clear signal to carry on with the monetary tightening. It means that the regulator could again undertake a bigger rate hike and stick to a hawkish stance for a longer period of time. However, the risk of a looping recession persists. Analysts argue that it may occur a bit later than previously expected. High inflation and tight monetary policy are exposing cracks in the U.S. economy. For example, last month, U.S. home sales fell by almost 8%, notching the longest slump in 23 years. The chance of a recession climbed to 70%, according to the latest Bloomberg survey of economists. The figure increased by 5% over the months. The weeks, which signals the level of fear or stress in the stock market, jumped by about 9.6%, and this is the highest level since September of this year. It also made an attempt to rise above a high of 24.30. As the Fed remains committed to aggressive tightening, recession fears keep mounting. A further increase in interest rates by major central banks may cause a downturn in the global economy. The US dollar as a safe haven currency is gradually recovering amid such market sentiment. US government bonds are also edging higher. A softer landing looks more real thanks to strong economic reports. This is bullish for the US dollar. In the Asian session, the US dollar index rose to 104.30 versus its main rivals. It's still trading above the important support level of 104.40, so it's slowly recovering some of its losses incurred since September. Nevertheless, the US dollar is still hovering near its 6-month low. Technically, its price remains in a bearish channel. If it declines below the support level, it's likely to dive to the main low of 101.30. However, the greenback will hardly give up so easily, although it's trading in the red price corridor of 104.20 and 104.50. The greenback also advanced against the yen on a Friday morning. The dollar-yen pair reached 132.60. After the release of inflation data, the yen is hesitant to pick up a trajectory. Consumer prices in Japan hit a 30-decade high. The index jumped to 3.8%, moving away from the 2% target set by the Bank of Japan. At the same time, a strong yen could have a positive impact on economic expansion. Rising inflation, on the contrary, is hurting the economy. The pair still maintains a bullish bias fueled by the Bank of Japan's hawkish move. In the Asian session, it was trading near the previous close at 132.30. Judging by the technical indicators, the pair slid into correction due to a stronger US dollar. It was moving in the price corridor of 132.20 and 132.80. The Australian dollar as a commodity currency grew to 0.6690 despite mounting fears. The Aussie ignored all the negative factors, focusing preliminary on a rise in oil prices and the news from China. The People's Bank of China injected 704 billion yuan, the second highest daily amount since October this year, and this move was aimed at supporting a shattered banking system at the end of the year. The Australian dollar climbed immediately amid such news. Although the AUD-USD pair is still rather volatile, it has been steadily moving up the intraday range of 0.6661 and 0.6706. And what's more, the rate gap between the Fed and the Reserve Bank of Australia is not big. Australia's current account balance is in a surplus, and this is another driver for the Aussie. And that's all for now. Stay tuned and don't miss our next video review on our channel. Subscribe and see you soon.